Welcome all the happy investors of India. I am addressing this because all of you would be having seen a beautiful journey of covering 5% in just 8 sessions. Last week we made around 3.5%. Is this election induced rally? No, not at all. Because this week, of course, it has had little more momentum, but the uptrend started in mid-November itself. So this 5 days we made around 3.5%. Overall 5% gain in the last 8 days. That is from 20,000 to 21,000. It's been very happy to address you all at Nifty when it is standing at 21,000. This rally went on from a few contributions from sectors like finance, which was very much neglected a couple of months back because FIIs were not participating there. Now they have come back, all the private banks, and energy, it is oil companies because crude oil is going down, then supported by power. Again, power as a sector has been doing well. In that, again, it's a coincidence that Adani Group have done extremely well in the last 5-8 sessions. So will this rally sustain? Immediately there will be questions coming into our mind. Should I take out money? Will it sustain? Because we have had a lot of calls from investors asking, what is this? It's been going so fast. Should we take out money? Should we book profits and go to some other low risk sectors? So risk doesn't matter here. It is only volatility. I've been talking about this for a very, very long time. If we are able to sustain the volatility, that much is the higher returns that we will give to our investments. So that said, will this uptrend sustain? The kind of momentum that we have built, of course, it will take it for a longer, some more upside, but it is not a widespread participation. Apart from the sectors which I spoke now, automobiles, real estate is also participating. Real estate, I think most of you would have already experienced the kind of momentum real estate as a sector has been doing. I have also gone and explored the reality in the ground itself. Went to check with a couple of projects, did some deals, got to know that many of the projects are getting sold in pre-launch itself. Huge buoyancy. Don't know if it is going to be a bubble because all the areas are getting consumed very, very fast. And that has also been seen in the real estate stocks. Real estate as a sector in the market has gone up 45% in the last 1 year time. Automobiles, we are as a country very, very strong in automobiles, and we would also be seeing this in reality. Every 10 cars on the road, 3 to 4 cars are new cars. So that much traction is there in the automobile sector. Two-wheelers were lagging behind, now that is also catching up. When automobiles do well, ancillaries also do well. Tires did extremely well in the last couple of weeks. So that said, there are many other sectors which is also showing weakness. Like if we talk about finance, there are a couple of PSU banks which did fairly well in the last 6 months have started showing tiredness. So new entrants are coming through. Private banks, public sector banks are kind of showing weakness, can correct. Like that, there are segments in other sectors also. So what is future? Manufacturing, we are doing fantastic. Recently, Tata's took over the Winstron iPhone project in Kolar, Karnataka. Now, I think 2 days back, they came out with the new projects in Hosur for one more iPhone plant. Like that, I'm just giving this an example. There are a lot of new projects that are coming, new manufacturing facilities coming up with huge investments into the country. That, along with real estate, we have been seeing a slew of new announcements coming up in the real estate sector. Automobiles, we are already strong, getting more stronger. We are acquiring majority of bigger brands across the world. Then, also there are some positive tractions that is there in the economy which has come on its own. Oil usage. I heard from one of the fund managers talking about this beautiful development that's happened in our country. 10 years back or 15 years back, when the Indian economy was at $1 trillion, our consumption of oil was around $100 billion. Today, when we have crossed $4 billion, that also we should be applauding ourselves. $4 billion of GDP, $4 trillion of GDP, which came at a very, very fast pace. When we are at $4 trillion, what was 100 billion when we are at 1 trillion did not go up to 400 billion. It has gone up to only 150 billion. That is because usage of oil has come down in our country. The reasons for this was really, really beautiful. Usage of diesel has come down because a lot of gensets that were running in our country has come down because power supply has substantially improved in our country. waiting in the roads. Road infrastructure has developed very well. Fast tags have come. E-Sugam due to GST has brought down all the wait times on the road, and that has brought down the consumption of oil itself. Though we are growing as a country, consumption of oil is coming down, and also ethanol blending in oil has brought down the dependency of crude oil. Of course, last 2 days back, government has banned usage of ethanol in the petroleum because of shortage in sugarcane. We are expecting a 33% shortage of production in sugarcane this year. So that said, not all things are rosy. There are some downside also expected in the market, which will put some pressure. While this segment, what is taking up the market now, the finance sector, oil, energy sector, power sector, which are all behemoths, and FII participation is very, very high there. When that much money is going to come to our country, because they have not participated in the kind of rally that we had in the last 6 months, 7 months, in the small and mid cap size. This money which is going to chase the market will take our market to new highs, probably 24,000 or at least near to 24,000 in the by December 2024 is what is talked about. If not 24, at least 12 to 15% rally is for sure in the next coming 12 months for us. So that being the strengths, also as investors, we have done a lot of changes in your portfolios. As you remember, we have done a change from small and mid cap to large cap in October. We moved 10% of money from small and mid cap to large cap, and how beautifully it has worked in the last month. At least this rally which the market went up, whole gain is coming up only from the large cap space, bigger companies. Whereas mid and small caps, in the last week alone, mid and small cap has grown around 1.5%, whereas large cap has grown at 3.45%. So whatever change we made by moving money from mid and small cap to large cap has beautifully worked for all your accounts. The second tranche of profit booking that we announced about 2 to 3 weeks back, it did not happen because market has been going consistently up. Probably this coming week, as I am speaking, this profit booking should happen. That way we will move out another 10% from mid and small cap to large cap. Thereby, what we are doing here is moving away profits from the segment where we made big returns to the place where that was not doing well, whereas now it has started doing well. The segment which has not done well in the last 1 year, which can cover, is very, very high. Whereas the small and mid cap, which has done extremely well, like 30 to 40% gains have been there in small and mid cap space. We have given equal allocation to mid, small, large cap. That is the reason all our accounts have done extremely well. Along with that, we have also selected some of the beautiful schemes in the mutual fund space which have done better than the market itself. Like a couple of large cap stocks schemes itself, when market has gone up X%, these funds have grown X plus 5%. That's where you are seeing big returns both in mid, large and small cap segments because of having the funds which had the best of stocks in them. Same kind of things what we are doing now, moving away from mid and small cap, taking out the big profits made some part of it and moving it to large caps. Next opportunity is probably this week we will be doing. If you have not submitted your request to do this churn, please send us a message by WhatsApp or by mail or even through calls. We can do the calculation and keep, because the calculation has to be done to identify what is the portion we have to exit and what funds we have to move in. All this should be arranged. So it will take about 1 or 2 days. Already we have done for all the clients who have shown interest. If you have not so far given your opinion, you can give it. We can do the calculation and keep. And also there are a couple of funds which has more exposure to these sectors which I spoke about: oil, real estate, manufacturing, automobiles, finance. In these segments, funds which are having more exposure, those are places where we can put more money, because next 12 months, even if we are looking at 15% returns, which is going to be substantial from the bank returns what we are going to make. Suppose you are having money in your FD, some lying money in SB accounts. Many of them are having money lying in SB accounts itself. That money can be moved because SB account gives around 3%, FDs give 6%. For 6.5% in FDs, post tax it will become around 4.7%, whereas for sure we can make easily double the returns that FDs can give post tax in the market. So if you are having money lying idle in the bank account, you can take this opportunity. At least in the next 1 year, you can make double the returns what your bank account can give. Let's say 10 lakhs is an FD. You are going to make post tax for 47,000 rupees on a 10 lakh FD interest returns. Same money, if we had moved to mutual funds in the next 1 year, we can make easily 1 lakh. That's about 50,000 rupees additional returns for the same money. Just we are moving away from bank to mutual funds, where it is today more safe because we are seeing a lot of companies across the globe coming and investing into India. So looking forward for all your participation in the upcoming beautiful boom that India is going to have. At least pre-election rally, which is already started, looks like there is going to be huge momentum building up. I was hearing some people telling that political money itself is coming to India in different routes to push them, which will push the market, and they might take out that money in during election times for distribution. So this will propel huge upside for the market. Being there in India at this moment, if we have some surplus money, why not take this advantage, which is going to come 100% for sure. Happy investing.